Hi guys, it's Thomas here from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 49th COT report of this year. And as usual, we're going to start off with the changes in commercials positions. So here we go. You can see that we have a 39% change in commercials positions. That is a very large change in crude oil. You can see on the chart that I don't think there is a change size such large as the one right now. This is a very significant change in commercials positions. Similarly to that, we have a large change in also in large speculators positions. This, of course, is a bearish change signal that can affect prices in the near term, meaning in a couple of days' time we could see a bit of a decline in the market. But of course, we always have to look at the 5 years chart to see a wider perspective about the market and see how extreme the COT report is. You can see that we are more or less in between the two extremes, or maybe a bit closer to the bearish side of the market. And not surprisingly, since we have had a bit of a rise in prices since the end of last year, early this year. So this trend can, of course, continue its path, and we may see even greater extremes in the upcoming future. But right now, at the moment, I would say that the last signal from the extreme perspective was actually a relative bullish one, and not that large. A few reports before that extreme, there was a similar size, and of course, there can be seen a much greater extreme back from here in the beginning of this year. So that's that for crude oil. I would say it's only the COT change signal that we should take into effect. Otherwise, I think the trend can continue upwards in the medium to long term. Our next market is another energy. It's heating oil with a 30% change in commercial positions. Again, we're talking about much greater changes than average. Again, bearish change signal. Of course, these markets do correlate with each other significantly, so we're not surprised to see that. But here, as you can see on the 5 years chart, the extreme picture is more visible. So we are getting close to very, very extreme levels, and you can see that the last time we were at such levels or close to these levels, what happened to the price of heating oil? Heating oil topped out, and then we saw a bit of a decline over there. So we're reaching these extreme levels right now, and that, of course, draws our attention to the question whether this market can continue its rise or for how long. So I think that's all we can state here, because we are talking about energy markets, and when we talk about crude oil, of course, everything that we come to a conclusion over there can or should be taken into consideration here as well. And as we jump over to the gasoline market, where we have a 29% change, again, very similar picture, large, much larger than average change size in the market, bearish COT change signal, and of course the 5 years picture is, I would say, more closer to the crude oil picture than heating oil, but nevertheless, the trend is the same over there. So we're going towards the bearish extreme side of the market. So all in all, over the energy markets right now, what we can see is that we have a bearish COT change signal, and a COT extreme that is just developing. We haven't reached that huge all-time or close to all-time bearish COT extreme levels yet. Large speculator COT extreme. Let's go on and have a look at the cotton market, where we have all-time COT extremes still, both in commercials and large speculators. We've talked about this in the last couple of reviews now. So this extreme, as you may see, is widening, and you can see that we have seen reaction from price. So last week prices declined. And that's exactly what we are expecting to happen from this COT extreme situation that we have right now. But of course, you have to see the longer term picture, and just that we had a decline does not necessarily mean that this decline will continue without any disruption towards the upside. So keep that in mind. Copper next market, all-time COT extreme there in large speculators, and 685 report extreme in commercials. So huge extremes here as well. And it's the same situation, bearish signal telling us that we should see prices declining from here. We haven't had that big decline last week as we had in cotton, but still, it just shows you the picture that this can actually develop a top, and we may see prices declining. I'm not saying that's going to happen. This extreme, as any all-time COT extreme, can widen for many weeks or even months before we reach a top, or of course in the opposite direction, a bottom. Russell 2000 all-time COT extreme over there. And here we have the all-time also in commercials positions. Let's jump to the 5-year chart. Here we go. You can see that as the prices are skyrocketing, we have this huge, never seen extreme in the market that is telling us, hey guys, this rise will end eventually, and that stress levels are so high in the market that the bubble should burst eventually. Of course, indexes these days are very risky markets, so caution is advised. But nevertheless, the COT report is telling us that the stress level in this market, and of course in other indexes, is huge, very large. Okay, that is going to be all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great week, trading week. Take care. Goodbye.